Hi, I'm Jeff Lovell, a staff accountant with AA Accounting, and today we're going to talk about some commonly overlooked itemized deductions. Some common itemized deductions that most taxpayers are familiar with include the ability to deduct mortgage interest on your primary home, state and local taxes paid, such as state income tax, sales tax, property taxes, donations to charitable organizations of cash or property, healthcare costs such as premiums paid for health insurance and out-of-pocket medical expenses, and some common miscellaneous ones are tax prep fees, broker's fees, safety deposit box, and union dues. In general, for an expense to be tax deductible, it needs to be paid in the current year by you and for your benefit with after-tax dollars. It cannot be reimbursed by another, such as your employer, and it has to further the goal of earning taxable income. So if you take out interest, which would otherwise be deductible, but you use that interest to earn tax-exempt income, like, say, interest on a municipal bond, you cannot deduct that expense. Some of the most commonly overlooked itemized deductions include sales tax on big-ticket items. If you deduct state sales taxes versus income tax, you can take the flat sales tax rate, but you can also add on to that sales tax paid on large purchases, like, say, a new vehicle. You can deduct casualty losses. This is very commonly missed. An example is a tornado destroys your house, the insurance company reimburses you, but you're still out of pocket $10,000. You could take a deduction for that. Another one is theft. Somebody steals your iPad and you don't have insurance for it. Well, you could take a deduction. Unreimbursed business expenses. This is a situation where your employer requires you to incur some expense, like to have your own laptop or cell phone or vehicle, or to pay for education classes, but they don't reimburse you, so you could deduct that. Legal fees in the pursuit of collecting taxable income. So say you have to sue your employer and you have to pay an attorney to do that, and then you get taxable income as a result, you can deduct the legal fees. Job search costs you can deduct. They're pretty generous about that. The only limitation is it has to be looking for a job in the career field you're already in. And gambling losses, another one. You can deduct your gambling losses with no limitation. The only thing is you can't deduct losses in excess of your gambling winnings. So if you win $1 million, you could deduct up to $1 million in losses. There are limitations on itemized deductions, and if you have questions about that, or if you have other tax or accounting questions, call the tax experts at AA Accounting. Call us today to schedule an appointment to discuss your tax situation. We can help.